Welcome back to Journey to XRP. Settle in because what we're about to walk through today is not hype, not price porn, and not another recycled XRP to the moon narrative. This is about separating signal from noise, and more importantly, separating what sounds exciting from what actually matters. Now, I want you to forget one thing right out of the gate: emotion. Forget the Twitter headlines, forget the Telegram predictions, forget the people screaming numbers with zero accountability. Because if you approach XRP emotionally, you will almost certainly make the wrong decision at the wrong time, and most people already have. Today's video is built around one simple question that gets abused constantly in crypto: when will XRP hit $10,000? But instead of pulling numbers out of thin air or dressing speculation up as certainty, we asked a machine designed to remove emotion entirely, Google Gemini, one of the most advanced AI systems on the planet, to model multiple XRP scenarios using actual assumptions, constraints, and macro conditions. Before you get excited, let me say this clearly: AI price predictions are not truth. They are frameworks. They are probability models, not prophecies. And if you treat them as guarantees, you are already losing. Most people misunderstand what tools like Gemini are useful for. They're not here to tell you what will happen. They're here to show you what would need to happen for certain outcomes to even be possible. That distinction matters more than price. Right now, XRP is trading around the low single-digit range, sitting as one of the largest digital assets by market cap. That alone tells you something most retail still refuses to accept. XRP is not a speculative microcap anymore. It's already systemically relevant, and that means upside behaves very differently from meme coins and hype cycles. So instead of asking Gemini for one fantasy number, we did something smarter. We asked it to evaluate XRP across 4 different scenarios: bearish, neutral, bullish, and most realistic, over 3 time frames: 3 months, 6 months, and 12 months. Then, and only then, did we ask the long-term question everyone obsesses over: what would it actually take for XRP to reach $10,000? But here's where I'm going to push back hard on you. If you're watching this video only because you want confirmation bias, if you want someone to tell you that $10,000 XRP is inevitable, easy, or right around the corner, you're in the wrong place. Because the truth is uncomfortable, and most people don't want truth. They want dopamine. The crypto market is full of people who confuse possibility with probability. Yes, many things are possible in theory, but markets don't move on theory alone. They move on liquidity, regulation, infrastructure, adoption velocity, and time, a lot of time. And that's exactly why this exercise matters. When an AI like Gemini models XRP, it doesn't care about narratives, it doesn't care about influencers, it doesn't care how badly you want generational wealth. It looks at constraints, market size, capital inflows, macro liquidity, regulatory friction, and utility adoption. That's the lens institutions use, not vibes. So in this video, we're going to do 3 things very deliberately. First, we're going to break down Gemini's short-term and medium-term scenario modeling and explain what actually drives those numbers, not just read them out like gospel. Second, we're going to expose where most people completely misunderstand long-term XRP valuation and why extreme numbers get thrown around so casually. And third, and this is the part most creators avoid, we're going to talk honestly about what would have to break, change, or be rebuilt in the global financial system for something like $10,000 XRP to even enter the conversation. No hype, no guarantees, no fantasy math, just frameworks, reality checks, and a clear-eyed view of what you're actually holding. Because if you don't understand the conditions required for massive upside, you won't survive the volatility it takes to get there. Now that the ground rules are clear, let's start where Gemini did, with the 90-day outlook, and why even the most bullish short-term scenarios come with more risk than most people want to admit. Stay focused. Now let's slow this down and get serious for a second, because this is where most people completely lose the plot. When you hear something like XRP to $10,000, your brain immediately jumps to fantasy mode. Lambos, retirement, screenshots, dreams. That's exactly the wrong mindset. The real question is not, can XRP hit $10,000? But what would need to happen for that to even be mathematically possible? Right now, XRP sitting around the $3 range with roughly 55-60 billion tokens in circulation already puts it near the top of the crypto market. For XRP to hit $10,000 today, you'd be talking about a market cap larger than the entire global economy. That alone should tell you something important. This is not a short-term trade idea, and anyone selling it like one is either ignorant or intentionally misleading you. That's why the AI answer pointing to 2030 actually matters. Not because AI is magic, but because the logic behind the answer is grounded in time, infrastructure, and adoption. XRP does not moon because of hype. XRP moves when systems change. For XRP to be valued in the thousands, it cannot just be a token people trade on exchanges. It has to be embedded into the plumbing of global finance. Cross-border settlements, tokenized assets, CBDCs, institutional liquidity rails. That's the only environment where numbers like that even begin to make sense. And here's the part most people still don't understand. XRP does not need retail investors to succeed. Retail buying pressure alone will never get XRP to those levels. What moves XRP is demand for liquidity. When banks, payment providers, governments, and institutions need XRP as a tool, price becomes a secondary effect. This is why focusing on short-term price predictions completely misses the point. The AI didn't say next month or next year for $10,000. It said after a paradigm shift. That's code for the old financial system breaks or evolves, and XRP becomes a core component of what replaces it. Now be honest with yourself. Does that sound impossible, or does it sound slow, boring, and inevitable? People laughed at the idea of Bitcoin being $100,000 when it was $100, not because the math didn't work, but because they couldn't imagine a world where institutions treated it seriously. XRP is in that exact same psychological phase right now, except this time the institutions are already in the room. So no, this is not about when Lambo. This is about whether you understand what you actually hold. Now, this is where things start getting genuinely interesting, because once we move past the short-term noise and stop obsessing over daily candles, the bigger structure starts to reveal itself. For the 6-month outlook, Gemini didn't just recycle surface-level predictions. It factored in macro liquidity cycles, institutional adoption timelines, and how regulation typically unfolds after ETFs are approved. And that matters because 6 months is long enough for capital to reposition, but short enough that speculation still plays a role. In the bearish scenario, Gemini sees XRP potentially dropping to around 1.55. The reasoning here is not XRP-specific failure. It's a global liquidity contraction. Think aggressive central bank tightening, a major sovereign debt event, or a sudden risk-off move where everything gets sold indiscriminately. In that environment, even assets with strong fundamentals get hit. This isn't XRP being weak, it's markets being ruthless. The neutral scenario puts XRP around 375. This is the nothing dramatic happens path. No ETF approval, no major institutional acceleration, no regulatory breakthroughs beyond what's already priced in. XRP grows slowly, tracks the broader market, and continues building infrastructure quietly while price action remains boring. This is the scenario most retail investors underestimate because it feels uneventful, but it's often where accumulation happens. Now the bullish 6-month scenario is where things start to separate XRP from the pack. Gemini projects $12 if several things align. Most importantly, a strong altcoin rotation driven by ETF approvals and renewed institutional inflows. In this case, XRP isn't just moving because Bitcoin moves, it's moving because capital finally has a compliant, liquid, institution-friendly rail to flow into. And that's the key distinction. But Gemini didn't stop there. It labeled 675 as the most realistic 6-month outcome, not because XRP can't go higher, but because institutional adoption doesn't explode overnight. It ramps. Banks don't flip switches instantly. They test, integrate, scale, and then expand. This scenario assumes steady progress, not euphoria, and that's exactly how real money behaves. If you're holding around 334 XRP, that realistic 6-month target would still represent roughly 125% return. No hype, no moon math, just a structural re-rating of the asset as clarity, access, and liquidity improve. And here's the point most people miss. This isn't about price predictions being right or wrong. It's about understanding why price could move. When you see projections backed by macro trends, regulatory shifts, and institutional behavior, not just chart patterns, you're playing a completely different game than retail traders chasing green candles. Now let's address the part everyone actually cares about, the $10,000 XRP question, without hype, without fantasy, and without embarrassing nonsense. Google Gemini did not say XRP casually hits $10,000 next year, next cycle, or soon. And if anyone tells you that, they're either lying or they didn't read the output properly. Gemini was very specific. It said $10,000 XRP requires a complete financial paradigm shift. Not a bull run, not an ETF pop, not retail FOMO. According to Gemini, the earliest plausible window for $10,000 XRP is around 2030 and only under one condition. XRP must transition from a payments-focused bridge asset to a globally adopted interbank settlement layer. That distinction matters more than price. Because at $10,000 per XRP, we're not talking about number go up. We're talking about XRP sitting inside the plumbing of the global financial system. Gemini's logic is straightforward. For XRP to justify that valuation, cross-border payments must meaningfully migrate on-chain, central banks must rely on interoperable rails, tokenized assets, bonds, treasuries, equities must require neutral settlement, liquidity must need XRP, not speculate on it. At that point, price is not driven by hype, it's driven by liquidity demand. And here's the part most people get wrong. A $10,000 XRP does not require every retail holder to be rich. It requires XRP velocity to drop and institutional demand to rise. High-value settlement assets don't move like meme coins. They stabilize, compress supply, and absorb flow. That's why Gemini explicitly framed $10,000 XRP as a systemic outcome, not a market prediction. No alt season, no candles, no YouTube thumbnails, just infrastructure. So if you're watching XRP day to day and thinking, why isn't it moving like Solana? Why is it boring? Why isn't retail excited? Good. That's exactly what a transition asset looks like before it's repriced. If XRP ever approaches that kind of valuation, it won't feel euphoric beforehand. It'll feel ignored. And by the time it's obvious, you won't be early anymore. That's the reality Gemini pointed to, whether people like it or not. Now, before we wrap this up, I need to slow this right down and make something very clear, because this is where a lot of people completely lose the plot. Everything you've just heard in this video, whether it's Gemini's scenarios, timelines, or the long-term $10,000 discussion, is not a promise, not a guarantee, and not a price prediction. It is scenario modeling based on assumptions, inputs, and probabilities. Markets do not move in straight lines, and XRP does not owe anyone a specific outcome. If you walk away from this video thinking XRP will hit $10,000, you've already misunderstood the point. The real takeaway is why such a number even enters the conversation at all. And that only happens when you're talking about infrastructure-level assets tied to liquidity, settlement, and institutional rails, not memes or hype cycles. Here's the uncomfortable truth most people don't want to hear. Most holders won't make it to the end game, not because XRP fails, but because they quit early. They sell when volatility spikes, they panic when narratives shift, and they chase short-term price instead of understanding long-term positioning. The people who benefit from structural changes in finance are not the loudest. They're the most patient. XRP's story, if it plays out the way institutions are positioning for, is not a next week or next month trade. It's a multi-year transition tied to regulation, tokenization, CBDCs, and liquidity infrastructure. That kind of transition rewards conviction, not emotion. And this is where I draw the hard line. Nothing in this video is financial advice. I am not telling you to buy, sell, or hold XRP or any cryptocurrency. I am not your financial advisor. Cryptocurrency is volatile, speculative, and carries real risk, including the risk of total loss. You are responsible for your own decisions. Always do your own research, verify information independently, understand your risk tolerance, and consult with a qualified financial professional before making any investment decisions. If you cannot handle volatility, uncertainty, or being wrong, this market will destroy you. So take this video for what it is: information, context, and perspective, not instruction. If you're still here thinking long-term, questioning narratives, and focusing on fundamentals instead of hype, you're already ahead of most people. Just remember, conviction without discipline is gambling, and patience without understanding is blind faith. Stay sharp, stay rational, and I'll see you in the next one.